Hello my dear CA final students. So this is a question paper review and suggested answers for indirect tax exam which was recently conducted, May 22 exam. And first things first, that many students message me immediately after the exam that they have written it well, and the rocket revision and the 200 questions which I have uploaded in my YouTube channel, so many students got benefited, so they have messaged me personally. And again this time that's it book, they prepared from that and they said like we have attempted 80 marks to 90 marks from that itself, sir. And surprisingly this time the marathon, I don't know really, no, I did not predict, but I have discussed few concepts in the marathon, and those concepts came like interest computation for 5 marks in GST and 5 marks in customs. Okay, 2 questions on interest computation which I discussed, and one case law which is related to software. Okay, so software imported along with the laptop, whether it is goods or not. No, Hewlett Packard case, Supreme Court case, that also I discussed. And 15 marks came in the part 1 of the marathon. And next day I have discussed a few important points. So from that also, around some 10 marks came. So that now I am very happy. Students and even students are also very happy. Because of that only I am happy. And thank you, thanks for your words and thanks for your messages you have poured in. And sorry for taking time, because I have just been preparing the question paper answers also. So because of that only it took time, otherwise I would have done this review before itself, because this time I want to do the review along with the suggested answers also. So that's the reason why little more time I took. And here is the question paper discussion, and you can see in the description the Google Drive link of this PDF. And overall this attempt paper is mediocre. I cannot say it is easy or I cannot say it is difficult. MCQs really difficult. MCQs really difficult. So they have went inside and they asked questions. So usually the areas which students will not even read, and usually whatever areas which they used to ask from that, they have just come out and they have asked. And MCQ, I don't know, this time lot of students have shared with me some PDFs from some Telegram channels, also some Mission CA like that, some Telegram channel also. So they have shared with me, the students have shared, and they have also said that these are the MCQs. So along with the options, I don't know how they got, but good only, because it is going to help the students at large. And MCQs part is really difficult, that's what even students also said. Then when it comes to descriptive part, it was like medium but lengthy. Lot of points have been tested, and this time institute has messed up in 2 questions. They did not give proper clarity, because of which the multiple answers are possible. Okay, so now without delay, we will start with the paper discussion. So look into the MCQ part first. First question, the time limit for reimportation from the date of exportation in respect of goods manufactured in India and reimported for repairs or for reconditioning other than specified goods and countries other than Nepal. So many students have taken it as Nepal and they have written it as 10 years, but actually the answer in this case is 3 years, because other than notified goods it is 3 years, and if it is notified goods it is 7 years, and if it is Nepal 10 years, but here it is other than notified goods. So the answer is A, option A is the answer in this case. Okay, 3 years. Then number 2, goods including edible items of value not exceeding dash in a licensing year may be exported as gift, 5 lakhs. So without any authorization, 5 lakhs worth of goods can be exported as gift. So thereafter definitely authorization is required. So therefore the answer is B, 5 lakhs. Then number 3, where an authorization holder violates any condition or fails to fulfill export obligation, he will be placed under denied entity list by an order. Such denied entity list order may be placed in abeyance for a period of. This is really something which is somewhere in the remote corner in the study material in FTP. Okay, so I'm just being frank with you that I did not discuss this point and all in any of my revision or in any of my fast track batch. In regular batch also I did not discuss this, because it was some remote point which was given. So apologies, extremely sorry that this point really I did not discuss in the class. but the student, I thought they will be reading, but yes, I have not discussed this point. This is something definitely student would not have answered. So this is not more than 60 days here. This is not more than 60 days. That is the answer for this. So that is whenever a person fails to fulfill the export obligation as a penalty, so that person will be kept in the denied entity list for a period of 60 days, and therefore that is this. Then next, identify correct statement. Person in charge of the conveyance has to carry a copy of tax invoice in case where he is not required to carry e-way bill. Actually, where he is not required to carry e-way bill, not only the tax invoice, even bill of supply in case of exempted goods, and if it is other than supply, delivery challan is also required. So option A cannot be considered as correct. B, person in charge of the conveyance has to carry a copy of bill of supply, actually both. So tax invoice in case of taxable supply, bill of supply in case of exempted supply, in case where he is not required to carry e-way bill. Okay, and moreover here there should be supply in case of other than supply, it should be delivery challan. Okay, so therefore option C is the answer. The delivery challan point is not given. Then warehousing period in respect of capital goods is, many students got confused between 1 year and the till the date of clearance. Actually, it is 1 year. The till the date of clearance is applicable for EOU and EHTP, STP, and warehouse where the manufacturing operations are permitted. In that case only it is till the time of till the expiry of warehousing period or till the time of clearance they can keep, no issue. But for all others it is 1 year. It is 1 year and it can be reduced for a period less than 1 year or more than 1 year. It can be extended, but the period given in the provisions is 1 year only. Then in which of the following mode of transport conveyance export goods cannot be loaded unless entry outward is granted? So this is actually, while discussing export procedures, I have said in the class, and here also there is a possibility that students might have done the mistake. Actually they would have written all mode of transport, any mode of transport, but no, only in case of vessel, only in case of export by vessel, goods should not be loaded until entry outwards is granted. Because the problem is, once the goods are loaded into the ship, thereafter entry outwards is not granted, so then again the goods needs to be unloaded. Due to that reason, for vessels we have that restriction, whereas for vehicle and aircraft we don't have that restriction. So therefore here the answer is A. Then one integrated case study MCQ. Krishna Hardware is a partnership firm registered under GST in the state of Uttar Pradesh, is engaged in supply of door and window fittings across India. In the month of October, it made following outward supplies. And one more disclaimer, suppose if this is not the exact wording or this is not the exact MCQs, I am extremely sorry. This is based on whatever students have shared with me. So based on that I am discussing, maybe some different question or different dates etc. could be there, but the template is this. Okay, so name of the state Haryana, value, date of invoice, date of receipt of payment, date of removal of goods. Then Rathod Singh, Punjab, so taxable value 3,75,000, 12th October, 10 November, 10th October, Rajasthan, Karnataka, like that data is given. The applicable tax rate on supply of above goods is 18%. Goods are generally received by the parties in Punjab, Haryana and Rajasthan on second day from the date of removal, whereas it takes 5 days to reach Karnataka. Messrs. Krishna Enterprises gives 2% cash discount to its customers wherever the payment is received in advance or within 15 days. Either the payment is received in advance. When is it called as advance? If the payment is received before the date of invoice, it is called as advance. Either that or within 15 days from the date of removal if the payment is received. So in these two cases, there is a discount that is being offered, and the respective credit note is issued immediately. Means in the same month the credit note is being issued, means that will lead to reduction in the liability. The buyer also takes necessary legal action with respect to such credit note immediately. To supply such goods as aforesaid, it received services from a local GTA, namely Messrs. Katushyam Transporters Unregistered, who raised consolidated invoice for 1 lakh on 22nd October, for which the payment was made on 27th December. Applicable rate of tax on services of transportation of goods is CGST 2.5% and SGST 2.5%. So which means 5% GST. So therefore we need to pay GST under RCM. What is the time of supply of goods in case of goods supplied to Messrs. Rathod Singh. So in this case, Rathod Singh means the second one. So time of supply of goods. Generally, the time of supply of goods is due date of invoice or actual date of invoice, whichever is earlier. Due date of invoice is the date on which the goods are removed if supply involves movement of goods, and if supply does not involve movement of goods at the time of delivery, in this case the supply involves movement of goods, so at the time of removal, therefore 10th October or 12th October, whichever is earlier. So we need to take 10th October as the answer. And then what is the gross liability attributable to outward supplies of Messrs. Krishna Enterprises for the month of October? Just the outward supplies. Okay, so first we need to see the discount part. So because outward supply, if you take 8,55,000, 3,75,000, 2,90,000, 4,80,000, so on that we need to pay GST, no doubt, but there is a discount. So even though it is a post supply discount, because they give the credit note immediately, which means that will lead to reduction in liability. So when the discount is being given, so first, if the payment is received before the date of invoice, here payment is 25th October, invoice is 10th October, no. But the payment is received within 10 days from the date of removal, within 15 days from the date of removal, 15 days of the date of removal of goods, yes, within 15 days. So therefore in this case, it is eligible for discount. Second case, whether the payment is received before invoice, no. 10 November, is it within 15 days from the date of removal? No. So second case, there is no discount. Then again third case, whether the payment is received before the date of invoice, so yes, and due to that reason discount is available. Then last case, whether the payment is before the date of invoice, no, and is it within 15 days from the date of removal, no. So which means in the first case and third case only there is a discount. That's what I have given. So that is 22,900. How 22,900? The 2% discount. So we need to add 8,55,000 plus 2,90,000 into 2%. That is the discount. So that is 22,900 reduced from the overall 20 lakhs. On that 18%, so 3,55,878 IGST, because all these are interstate supplies, because they are located in Uttar Pradesh and all these are interstate supplies, so there is only IGST liability. And what about the GST payable on RCM? That is not actually on outward supply, that is on inward supply. Here the question is only about the outward supply, so therefore 3,55,878. Then total value of all the supplies involved in the above case scenario on which Krishna Enterprise is liable to pay tax for the month of October, it is 19,77,100. How? So total 20 lakhs minus discount is there. So because of which 19,77,100 will be taken. So that is the answer for this. Then what is the treatment of transaction relating to buying and selling of shares and securities by branches on the company's own account, which is termed as proprietary trading? Which of the following statement is correct? Generally, proprietary trading is different from doing the share trading on a commission basis. So generally what happens, I have an excess amount. So that excess amount I will be giving it to one fund manager, okay, or one equity analyst. So what that person will do, he will be making investment in different places and he will generate a return, and whenever he generates a return and gives to me, I will be giving him a commission, okay. So that's what generally a person who is doing share trading on a commission basis will do. So now whatever commission that they get, that will be treated as supply. But here in proprietary trading, compared to share trading on a commission basis, it is like whenever there are some unutilized funds, so some funds are there, so using that funds they will be making some trading and they will be generating some gain. So basically that gain is the return that they will be getting, okay. So which means here there is no commission that they are earning, so it is purely the gains what they will be getting. So these branches will get the gains out of that proprietary trading. So then it will never be treated as goods or services, because transaction in securities is not facilitating or arranging transaction in securities. These are purely transaction in securities. Purely transaction in securities is not at all a supply. Actually, many times I will be telling in the class that the MCQs appears like, Chinese people. All four options look alike. No, all, like basically Chinese people, no. So they will look alike. There won't be any change and all. We will just get confused. So who is who? Like that the options are given this time, that not a supply, neither supply of goods nor supply of services. Even I confirmed, double checked with many students. I said that yes sir, these are the options. So actually the student will definitely get confused. So they will be thinking that, so it is neither supply of goods nor supply of services. In this regard, you need to know something, that this neither supply of goods nor supply of services is a term used for exclusion from the value of exclusions from supply. That is 7 subsection 2 read with schedule 3. There only they use the word neither supply of goods nor supply of services. So which means it is excluded from supply only, we need to use that word. But whenever it is not at all covered under supply, we should call it as not a supply. This is a thin difference. Usually in regular batch, I will be taking the class from Barak, so they will be knowing it better. But you know, that is a problem in revision, like attending revision classes, you know, last minute revision and all. Yes, you can write, but only thing, at least you know, some little bit of regular batch also you should have attended. So then only it will definitely help you, because these are the thin line of points. Okay, so neither supply of goods nor supply of service is something, so which will come only in case of exclusion from supply. But other cases, if it is not at all a supply, so that is, if it is not at all covered under supply, then we should write it as there is no supply involved. So option B is the answer. But yes, many students have messaged me that they wrote D as the answer. So sorry boss, but actually D is the word which is excluded from supply. What are excluded from supply? That spalled slow is there now. That is only excluded from supply. That is sovereign functions, post, actionable claim, death related, funeral, burial, employee to employer, then sale before import, and then liquor license. Like that, few points are there now. Those are only excluded from supply. When an activity is not at all supply, we need to write it as no supply involved, because it is transaction in securities. Then next, number 11, billing made by SEBI and stock exchange, including fee and GST amount on head office related to transactions executed by the branches, should be administered by the head office by way of, actually the transactions are done by the branches, but the bills are raised to the head office. So in that case, actually head office cannot take the credit, because these are the transactions related to the branch officers. So maybe head office can take the credit, and they should register as ISD, and they will distribute that GST credit. But whether GST credit is available or not, that's the next story, because once an ISD, even though it may be a blocked credit or ineligible credit, so they should take as a registration ISD, and they need to distribute that ITC, and the recipient, if eligible for ITC, they will take, otherwise they will not take. So therefore, it is C, head office should take the registration as ISD and distribute the credit. What will be the treatment of stamp duty charged from client for contract execution? So this treatment of stamp duty, so is actually money collected by, okay, so whenever some stamp duty is being collected by the government, so in this case, when stamp duty is collected, that is excluded from the supply. Okay, so but here again there is a possibility, this is a little tricky MCQ according to me, because stamp duty is a government levy. So if you see, government activities are excluded from supply. Sovereign functions of the government acting as a public authority, excluded from supply. From government point of view, if you see, it is neither supply of goods nor supply of services. Whereas if the broker is collecting the stamp duty for the contract execution, so it will not form part of the value of taxable supply. So here actually from government perspective, if you see, it is stamp duty, statutory levy, not treated as, neither treated as supply of goods, not treated as supply of service, because it is excluded from supply, 7 subsection 2. But if it is about the person who is collecting the stamp duty, that is the broker who collects the stamp duty, so if that be the case, because I don't know the case study, I did not see the case study properly, if that be the case, if that be the reading, if that be the question given in the main exam, so then it should be, it will not form part of value of taxable supply, should have been taken. Okay, so therefore here depending upon that, so I don't know what is the exact question, so depending upon that it should be A or D. But according to me, maybe in the case study it would have been given as what is the amount of stamp duty collected by the broker from the client, so then it will not be treated as value of taxable supply, could be the answer. So here, as I did not get the clarity about the MCQ, that's why I just gave you this option D, but I am explaining option A also could be the answer. It all depends, because I did not get the original source. So different students have shared, so based on that only I am commenting on this. Then What is the treatment of stockbroker collects court fees and deposits with the government? So this is pure agent expenditure. So stockbroker collecting, here the student has shared with me properly what is it is. So stockbroker collecting the money and deposits with the government. So this will be acting as a pure agent. Okay. So collected as a pure agent and therefore there is no GST. In case of interstate supplies, a consolidated revised tax invoice cannot be issued in respect of all unregistered recipients if the value of supply exceeds 2,50,000. So if the value of supply exceeds 2,50,000, so invoice wise details should have been given. We cannot give consolidated. So option A is the answer, 2,50,000. Then section 25 6D stipulates regarding person required to undergo authentication shall not apply to whom other authentication is not applicable. So that also while discussion in that marathon I told you, that is a person who is not a citizen of India. So to that person, so this will not be applicable. Again here, so students may think non-resident Indian and person who is not a citizen of India, because non-resident Indian does not mean that he is not a citizen of India. So because even though he may be a citizen of India, but he can become non-resident because that is depending upon his residential status. So actually that should not be the answer. Again here there is a possible that the student might have taken A, but actually it is not a citizen of India. That is the correct answer. Then the time limit for issuance of order of best judgment assessment under GST is 4 years from the date specified for furnishing. No, it is 5 years. 5 years because best judgment assessment order under section 63 and 62 and 63. So 63 for unregistered persons. So that should be 5 years from the due date of furnishing annual return for the relevant financial year. So the option B is the answer. Determine the place of supply of return journey as per GST law. Actually only for return journey we need to select. So even though there may be a single ticket, actually there is one point here. Even though there may be a single ticket for the round trip, so we need to treat it like separate and we need to determine the place of supply for both, that is onward journey as well as return journey. So place of supply in case of transportation of passengers, B to B location of recipient, B to C starting point of the passenger, it is a point of embarkation. So in this case return journey, from where to where they are coming from. He left Jaipur on 2010-2020 in the late night flight and landed in Chennai next day. He left Chennai and in the morning flight and landed in Jaipur on the same day. So return is from Chennai. So the starting point, he is an unregistered person. So the starting point is Chennai. So therefore Chennai should be taken as the place of supply. Then 18th one, Messrs. Raj Apparels is registered under GST in the state of Rajasthan. It sells leather handbags across India through e-commerce operator Ycart. Ycart is registered with Madhya Pradesh GST authority as TCS collector and collects TCS on supplies made through it. For the month of Feb, Raj Apparels made interstate supply of 4,60,000. Supplies amounting to 84,000 were returned in the same month. Outward supplies are exclusive of tax, whereas sales return is inclusive of tax. So this 4,60,000 is exclusive of tax, whereas this 84,000 is inclusive of tax. Now, what is the TCS that needs to be computed? And here the rate of GST is 12%. Simple. First, we need to compute TCS on the net value of taxable supply. What is the net value of taxable supply? Outward supply. Value of outward supply is made in a month minus value of sales returns. But here 4,60,000 excluding GST. While computing TCS, we need to take out the GST. So 4,60,000 excluding GST, perfect. But 84,000, when we reduce, we should not reduce 84,000 from 4,60,000. We need to take out the GST component from 84,000. So therefore, from 84,000, we need to take out the GST component into 100 by 112 means we have taken out GST component. From 4,60,000, if you exclude that, that will be 3,85,000. On that 1% will be 3,850. So option A is taken as the answer. Then question number 19. RP Rice Private Limited, a registered person under GST, is providing service of milling of paddy into rice, loading, unloading, packing, storage and warehousing of rice. So loading, unloading of rice, packing, etc. of rice is exempted actually. Okay. And the company has made the following supplies. Loading and unloading of rice is exempted, whereas providing service of milling of paddy into rice. Milling of paddy into rice is not exempted. So that is specifically there is one circular which says that so paddy to rice, job work in relation to paddy to rice. So milling of paddy to rice is not exempted. So that will be taxable, which means only 15 lakhs will be taxable. On that 15 lakhs, 5%, because tax rate 5% is given, 75,000 is the answer. Then the last MCQ, THARUN'S Limited, registered under GST in Guwahati, Assam, approached Mr. Naman, a GST specialist, to import GST training to its account and finance personnel. Mr. Naman imparted said training to 100 employees of THARUN'S Limited at conference room of Lankan Hotel located in Siliguri, West Bengal on 25/8. What is the place of supply? The place of supply of GST training imparted by them. So first, in case of section 12 is applicable in this case because both are located in India. And in case of training and performance appraisal, B2B, location of recipient, B2C, location where service are actually performed. In this case, it is B2B because, so here, training is provided by Naman, a GST specialist, to THARUN'S Limited registered. So B2B. So B2B, we need to take location of recipient. What is the location of recipient? So Assam, Guwahati, Assam. So we need to take Guwahati, Assam as the place of supply. Suppose if the recipient is unregistered, we would have taken location where service are actually performed, that is West Bengal. But in this case, the answer is Guwahati, Assam. So this is the MCQs. Actually, in these MCQs, I think the students can score around some 25 out of 30 because the 5 questions are really difficult. So 25 out of 30 will be a easy target in this. Next. Then moving on to the descriptive paper, this first question here, actually first question, little bit messed up. They did not give with clarity. Okay, I'll tell you why. See this question. Supermarket is a proprietary firm and a GST registered supplier in Ahmedabad, Gujarat. The details of supplies, purchase and expenses for the month of December 2021 of supermarket are as given below. Details of outward supply, intrastate outward supply 45 lakhs, CGST, SGST, interstate outward supply IGST, and exempt supply under GST, there is no GST. Details of inward supply, intrastate, so within the state, so CGST paid, SGST paid, interstate, so IGST paid, exempted supply, no GST. First of all, no GST paid. Details of expenses, freight paid to GTA. So this freight paid to GTA will be under RCM because the rate of GTA given here, the transportation rate is 5%. So which means that, reverse charge 5%, so RCM we will take on this GTA. For intrastate transportation of goods, 20% of the freight paid towards transportation of goods not liable to GST, which means that what? Out of this 60,000, 20% is paid for transporting the goods which are not liable to GST, which means we cannot take ITC with respect to that. We will pay GST, but we cannot take ITC with respect to that. With respect to 80% of the expenditure, GST paid can be taken as credit because that is used only for taxable outward supplies. That is the meaning. But here they did not give whether it is intrastate or interstate. So in case of transportation of goods, it depends. Location of supplier, place of supply. So in the absence of information, because here what happened, this alone is given as intrastate. Which one? That premium paid on insurance alone is given as intrastate. Others are not given as intrastate. And we know that whenever a transaction cannot be classified as intra or inter, it should be deemed as interstate. But I don't know whether ICAI is going to consider this or not. But definitely ICAI should consider, if the question is silent, then it should be treated as interstate only because there is no information about location of supplier and place of supply. Suppose if the student have taken as intrastate, so definitely they should award the marks. Definitely they will award the marks or not, I don't know. But if the question is about silent, then it should be interstate supply. So then only the marks should be given. Suppose if they are not giving marks by taking it as interstate, so definitely based on the suggested answer which is going to come, we will definitely fight, don't worry. Okay. So but here it should have been taken as interstate according to me. 60,000. So this 60,000 is divided into first inward supplies we will complete. Computation of input tax credit. I gave the answer. Actually, that's why it took time because every question and answer. So typing took time here. Okay, for that reason only. So statement showing computation of ITC. First ITC computation we will see. So intrastate taxable inward supply. What is it? Intrastate taxable inward supplies. That is 40 lakhs. On that 40 lakhs, the rate of GST is 9%, so 3 lakh 60, CGST, SGST. Then interstate taxable inward supplies 10 lakhs, on that IGST 18%, so 1 lakh 80,000. Then exempted inward supplies, there is no GST at all which is paid, so leave it. Then freight paid to GTA for inward transportation of goods which are not dutiable, which means we cannot take ITC. So that's why I have not taken it into ITC computation, but definitely we would have paid GST on that. Then freight paid to GTA for inward transportation of goods liable to GST, 60,000 into 80%, 48,000 on that, 2,400 is the GST paid. I put it under IGST. And we can take the task credit, full credit we can take. It's not a common credit. Why it's not a common credit? Because it is used only for dutiable goods. Clearly it is given in the question itself. That is liable, goods liable for GST. So then next point, telephone expenses. Again there is no information about intrastate or interstate, so we can take it as interstate. Out of the above, 18,000 was spent on landline installed in the sales outlet. Yes, it is used in the course or furtherance of business, so we can take ITC. And 12,000 was spent on the phones provided to employees in relation to work of the firm. Yes, it is also used in the course or furtherance of business, and we don't have any blocked credit related to that, so we can take this ITC. 30,000 rupees into 18%, 2,700, 5,400 we can take as credit, but this 5,400 again will become a common credit. Okay, this will become a common credit, C2. And next one, premium paid on insurance taken on a car used by the proprietor of the firm in relation to the work of the firm. Generally, car is a blocked credit. Motor vehicle capacity does not exceed 13 and it is not covered under exception, so it's a block credit. With respect to that car, general insurance is also block credit, so ITC not available, even though GST is paid, but ITC is not available with respect to this. And then outdoor catering services, again here also whatever outdoor catering services, the GST is paid on inward supply, but we cannot take ITC because outdoor catering is a blocked credit. 17 subsection for ITC cannot be availed. So that's why I have not taken it into the ITC. Whereas the last one, rent, commercial property, so definitely it will be taxable and we can take it as ITC, but it will become common credit. Again, there is no information as to whether it is intrastate or interstate, so that's why we are taking it as interstate. So because it depends here, property owner, location of supplier and place of supply. So for example, I may be registered in Andhra Pradesh, I have a property in Tamil Nadu, then the place of supply will be Tamil Nadu, so it can be interstate also. So as they have not given, we will take it as interstate, 60,000 rupees into 18%, 10,800, and this is also a common credit. So we have two common credits, 5,400 and 10,800, 16,200. Now this common credit attributable to exempted supply. Why is this common credit? Telephone expenses used for both exempted, taxable. Rent used for both exempted and taxable, so which means that it's a common credit. So what is the exempted turnover to total turnover? The exempted turnover is 6 lakhs and the total turnover is 66 lakhs. So therefore 6 divided by 66 is the amount to be reversed, 1,473. So from this 1,98,600, 1,473 if it is reduced, so the remaining 1,97,127, here 3,60,000, 3,60,000. This is the credit that we have. Then when it comes to liability, so here 45 lakhs, 4,05,000, 4,05,000, 15 lakhs, 2,70,000. So actually they are asking about the provisions of Rule 86B. As per Rule 86B, so whenever the turnover in a month exceeds 50 lakhs, yes, in this case, turnover means excluding exempted supplies, it exceeds 50 lakhs. So definitely 86B is applicable. As per 86B, 99% of the liability can only be paid through electronic credit ledger and 1% of the liability should be paid through cash ledger. But in this case, whatever credit that we have is less than 99%. So definitely we will pay 1% of the liability through cash ledger only. So therefore 86B need not be applied in this case, but you need to write about that information about 86B. Okay, so the gross liability and the credit, if you adjust, this is the net liability payable under FCM, and we have some GST payable under RCM, that is on freight, GTA services. So the 3,000 if you add IGST, so then we will get the total gross GST, that is net GST payable under FCM plus GST payable under RCM. So total net GST payable, so that is 75,873. So we got, okay, then 45,000, 45,000, 75,873. This is the answer and this is the explanation related to Rule 86B. Then next one. Question number 2A. Measures A to Z, a proprietary firm registered under GST is engaged in providing various services under one roof. The firm provides the following information pertaining to supplies made or input services availed by it during the month of March 2022. Amount collected for loading, unloading, packing and warehousing of potato chips. Potato chips warehousing, so we don't have any exemption, so that will be taxable. So that 15,000 will become taxable and here, so all are intrastate supplies, okay. Rate of tax for both inward and outward supplies, CGST, SGST 9% each, except for the service of renting of vehicle, CGST, SGST. All supplies are intrastate only. That's the reason why we have taken CGST, SGST. So this will be taxable. Then second, fee paid for yoga camp conducted by a charitable trust registered under section 12AA for employees of the firm. This is fee paid. So inward supply, and inward supply provided by one trust to them. So on that there is no GST at all, first of all. Why? Because services provided by a charitable trust by way of advancement of religion, spirituality, yoga is exempted. So there is no GST on this inward supplies. Then next, interest received on fixed deposits with Apna Bank by the firm. Services by way of accepting deposits or loans. So like accepting deposits or advancing loans, etc. So for which, if the consideration is represented by way of interest or discount, is exempted. So therefore this interest on deposits will be exempted. So no need to pay GST on 30,000. Then next, professional services provided to foreign diplomatic mission located in India. So this 50,000 will be taxable, because services provided by foreign diplomatic mission is only exempted, but services provided to foreign diplomatic mission is not exempted, okay. So therefore this 30,000, this 50,000 will be taxable. Then recovery agent service provided to ABC Finance Limited and NBFC. Actually this is taxable under RCM. So liability to pay GST is not on A to Z proprietary firm, but it is on the ABC Finance Limited under RCM. So it will not be taxable in the hands of A to Z, okay. And then security services provided to XYZ Limited, a registered person under GST. Security agency services provided by a person other than body corporate. Yes, it's a proprietary firm other than body corporate to a registered person is covered under RCM. So therefore this XYZ will pay GST under RCM. So again it will not be taxable in the hands of A to Z. So no need to take it into the hands of A to Z. Then next one, receipts from running an educational institution, including receipts for providing residential dwelling services, that is hostel services by the institution to the students. Any service provided by an educational institution to its students, faculty and staff is exempted, including the hostel services. So entire 35 lakhs will be exempted. Then supply value including cost of fuel for provision of renting of motor vehicle service to NPS Limited. So the rate of GST is 5%. First, supplier should be other than body corporate. Yes, A to Z is other than body corporate. Recipient is body corporate. NPS Limited, body corporate. Rate of GST 5%. So it is taxable under RCM, where NPS Limited is required to pay GST under RCM, which means that it will not be taxable in the hands of the supplier. So A to Z, it will be taxable in the hands of recipient NPS Limited. So which means again there is no liability. So therefore the gross GST payable will be 5,850, but you will get the full marks. So here this question is for 9 marks. You will get the full marks only when you write the notes. So if you are not written notes, so definitely don't expect 9 marks. Maybe some like 4 marks or 5 marks only you can expect. That too doubtful. But notes definitely you need to write. Okay. Then next, 2B. A non-resident Indian from USA donated food processing machinery to Home Charitable Trust. Home Charitable Trust, however, paid commission to local agent in India. Importer paid the commission. So Assistant Commissioner of Customs determined the FOB value of the machine at US $17,500, including design and development charges. Yes, that will be forming part of FOB price. The trust has accepted the value determined. Actual air freight paid was $4,000 and insurance cost was $1,500. It's actually a simple question. So FOB is given. So for that FOB, so commission paid to local agent of the exporter. Local agent of the exporter means what commission? It is a selling commission. So we need to take FOB price, and here what should be taken as the exchange rate? Date of presentation of bill of entry only exchange rate should be taken. So therefore the exchange rate is 75 rupees per dollar. So we need to take FOB, convert into Indian rupees, 13,12,500. Then local agent commission 1,57,500, $2,100 into same exchange rate, and revised FOB we will get. And actual air freight should be actual or 20% of FOB, whichever is lower. So actual air freight is given as $4,000. So 4,000 into 75, 3 lakhs, or 20% of revised FOB 2,94,000, whichever is lower, 2,94,000. And then insurance, if actual is ascertainable, we will take actuals, that is 1,500 into 75, 1,12,500. So therefore we got the CF price as the value. Now for this we need to compute the basic customs duty. The basic customs duty, so we need to take the relevant date for determination of rate of duty in case of imports by aircraft is date of presentation of bill of entry or arrival, whichever is later. So whichever is later, if you see, So it is 5th April. On this day, the rate is 15%. So we should take 15% as the rate of basic customs duty, social welfare surcharge 10% on that, and IGST will be assessable value plus basic customs duty, social welfare surcharge into 18%, because IGST rate is also given in the question. And now the customs duty payable will be this. Okay. So it's a simple question only, not much complication is involved in that. Then question number 3A. So 3A, actually 2 question, 14 marks, 9 and that question is for 5 marks, yes. Then 3A, in the case of transactions at 1 and 2 below, determine whether the amounts received are liable to GST. Briefly explain the applicable statutory provisions in support of your conclusions. So ABC Limited, a registered bank, recovered check discounting charges of rupees 5,250 from a customer C and Co. Actually, services by way of accepting deposits or advancing loans, anything. Okay. So if the consideration is represented by way of interest or discount, is exempted. So here the consideration is by way of discount. Due to that reason it is exempted. Interest also exempted or discount also exempted. Here it is discount which is exempted. Notification number 12 2017 exemptions. Then next, T Limited, a dealer in air conditioner, supplies each unit at a list price of 30,000 rupees per unit. He also has a EMI scheme where the customer can take delivery of the air conditioner on a monthly EMI. So this is a hire purchase transaction because only 2 parties are involved, hire vendor and the hire purchaser. So in this case of hire purchase transaction, the interest involved is chargeable to GST because the interest will be coming under delay in receipt of consideration. So the interest involved in hire purchase is taxable. So as the interest involved in hire purchase is taxable, the penal interest for delay in receipt of an installment is also taxable. That is, it's also to be included in the value and chargeable to GST accordingly. Okay. So due to that reason, then this will be taxable. Actually, it is a circular given in valuation chapter, hire purchase transaction versus hire purchase financing. So even in the rocket revision batch also I have discussed that point. Next, number 3. Messrs. Aerospace Airlines, having registered place of business in Mumbai under GST, issued a ticket from London to Delhi to Mr. Ajit Khanna, a resident of Agra, UP, who is not registered. Again, actually in MCQ also they have asked for 1 mark. Again they repeated, that is transportation of passengers by air, section 12, B2B, location of recipient, B2C, starting point of the passenger. So in this case the starting point of passenger is London. So that will be taken as a place of supply. They did not ask nature of supply, so no, we don't have to write. Then question number 3B, Mangesh Enterprises, Goa, a registered supplier, has made the following supplies in the month of February 2022. Supply of guest house accommodation with facilities of cooling, heating, internet and parking to customers on daily rentals of 1,500. Mangesh Enterprises has 20 guest suites. During the month there was 50% occupancy. Actually this is for the month of February. But many students have taken 30 days, like actually 28 days only in February 2022. So 28 days should be taken. So 28 days, each day 50% occupancy. How many guest suites? 20 guest suites. So 28 into 20 into 50%. And for each room they are charging 1,500, more than 1,000 rupees, which means it is taxable. Temporary accommodation per day more than 1,000 will be taxable, entirely taxable. So 1,500 will be taxable. And they are providing facilities like cooling, heating, internet and parking. All these will be coming under composite supply, naturally bundle. So therefore we need to take the rate applicable to accommodation. So that is renting of guest house service, 18% only will be taken in this case. Then catering and food service were supplied separately to those who opted for it. Means, so accommodation and food will not become naturally bundled. Why it will not become naturally bundled? Because those who wanted, they can pay for food, which means that it is not naturally bundled, so it is not a composite supply. Okay, will it come under mixed supply? No, it will not come under mixed supply because there is no single price. Means there is a separate price. So these are treated as individual supplies and taxable accordingly. So first accommodation service we will take. Accommodation service will be 20 guest suites and 28 days into 50% occupancy into 1,500 per day into GST rate 18%, 75,600. Whereas for this catering and food service they collected 70,000. So for entire month, so therefore on 70,000 the rate of GST of catering is 5%. So 70,000 into 5%, 3,500. This is the answer for that. 2 marks. Then next, supplied monthly air conditioner maintenance service intrastate to a software company under a contract effective 1st February 2022 for 6 months. According to the terms of the service in the contract, the software company is liable to pay service charges of 12,000 for the entire period plus cost of spares and replacement at actuals. Problem is that, a service will become continuous supply of service if the service takes more than 3 months to complete and involves periodic payment obligations. So actually this question, there is no clarity, because they are telling that it is like service more than 3 months to complete, but where is the periodic payment obligation? Because there is no clarity as to whether this 12,000 will be payable after 6 months after completion of the contract, or it will be payable on a monthly basis. That information is not given. Okay, so due to that reason, so actually there are two alternative answers that are possible for this. So either we can take it as a continuous supply of service, wherein the payments are receivable on a monthly basis. So 2000, 2000, 2000, 2000 like that, plus that month whatever is the spares actuals. That way we can take. If that way we can take, then the due date of invoice will be, here the question is about due date of invoice. Okay, so the due date of invoice will be, is yet to raise invoice though the service was provided in February. During the month the company has not yet provided any spares or replacement. Further, the concern has not received any amount. Okay, so in this case, what will happen is that we will be considering it as continuous supply of service. So therefore, as there is no information regarding the payment frequency, we can take assumption. Two assumptions are possible. If you treat it as continuous supply of service, so then we need to take, upon completion of each month. So invoice for 2000 plus GST of 18% to be raised at the end of each month for February. So by 28th February, that is one way. Or another way, if we treat it as a normal service, because there is no periodic payment obligations and it is a normal service, within 30 days from the date of completion of service. So when the service is completed, it is commenced from 1st February. 1st February for 6 months. So whenever that 6 months gets over, that is a completion of service. From there, within 30 days, the invoice needs to be raised. So actually, both the answers are correct, because it all depends upon the assumption. So therefore, ICAI should give marks for this. Okay, that is either way answer if written. Okay, so first of all, don't believe in giving some marks if you have just attempted. Like that, we don't have anything in indirect taxes paper. For this attempt, indirect tax paper, grace marks. First of all, in ICAI, there is no concept of grace marks, whatever I have seen. Okay, so I started my teaching journey in 2007, and now it is what, 2022. This many years, I never come across something called as grace marks given in ICAI. Okay, so unless otherwise ICAI maybe 1 or 2 times they would have given somewhere in the past, but actually literally speaking, I don't know whether they will give. Mostly in GST, as the alternative assumptions are possible, but what we can definitely fight for is that, so if both the alternative answers are given, the mark should have been awarded. Okay, and with a intention that, so maybe they may consider this. So that's the reason why I'm just putting this video, so that if any person in the committee, in examination committee, if they see that, so maybe they may consider this and they should consider this. Okay, so then question number 3C, the laptop supplied along with software loaded on hard disk drive has to be classified as laptop and valuation has to be made as 1 unit. So this is the question which I was referring to. So in marathon on 27th or so, I discussed this in that marathon, and I clearly told you customs case laws, one question will be guaranteed, 5 marks. See, this case law also I discussed, Hewlett-Packard case. Okay, I discussed, and actually it is Hewlett-Packard India sales case, Supreme Court decision, wherein it is held that the software which is compulsorily supplied along with the laptop should be classified along with the laptop, and the rate applicable of laptop should be taken on the software, and even that will be chargeable to GST. It should be included in the valuation of laptop for the purpose of payment of customs duty. It should not be treated as import of services. Okay, so that is this case law, and therefore this decision should have been written by the student, and 5 marks at least. If the case name is not written, if the decision is written, at least 3 or 4 marks can be expected. Then question number 4A, and those who are watching this video are appearing for November 22 exam, please try to complete the case laws, like selected case laws are there in the study material for customs. Definitely every attempt they are asking one question from the case law. So for 4 or 5 marks, you can score that. Okay, that is given in the ICI book itself, selected case laws. Then 4A, Agni Limited filed GST return under section 39 for the month of January 2021 on 11th April 2021. Original due date for the said return was 20th February. Yes, for the January month, the due date is 20th February. Details of tax assessed as payable for the said month are given below. CGST, SGST, output tax payable under reverse charge, input tax credit available for utilization. Here, there are two assumptions that are possible. Assumption number 1, as they use the word input tax credit available for utilization, which means that tax payable under reverse charge is included in this. When what is the meaning of ITC available for utilization? Even the GST paid under RCM can be taken as ITC in the same month. Means that is also taken into the ITC available for utilization. So as this word utilized for available for utilization is given, so here we can take an assumption that this 40,000 is included in that 70,000. This is one assumption. If we take that way, then what will be the liability paid through the cash ledger? 1,80,000 minus 70, 1,10,000 plus 40, 1,50,000 will be the liability paid through the cash ledger. Okay, and then there is a delay in payment. Why there is a delay in payment? 20th February they should pay, but they paid on 11th April. So as there is a delay by 50 days. So from the first date after due date till the date of payment, there is a delay by 50 days. GST is payable on the net liability. Sorry, interest is payable on the net liability. So this interest computation also I discussed in the marathon. On 27, I discussed this also. This concept also I discussed. Net liability. GST is payable on net liability. So 1,50,000 into 18%. This is one answer. But there is an alternative answer also for this. What is that alternative answer? 1,80,000, this 40,000 rupees GST paid under RCM can be availed as ITC, means that 40,000 is not including 70,000. Again here both the answers ICI should consider, because there is nowhere given in the question that the ITC available for utilization includes the tax payable under RCM. So due to that reason, if the student has taken any assumption, the answer, the mark should have been given, because it is only the computation which we need to see, because there is no clarity in the question. It's a mistake in the question perhaps. So then two assumptions are possible. Both the assumptions are correct. The answer should be given. So even if the student has taken that 70,000 rupees is excluding 40, then how much will be the ITC? 70 plus 40. 70 plus 40, which means that it will be 1,10,000. So 1,80,000 minus 1,10,000. So that will be 70,000 plus tax payable under RCM 40. So 70 plus 40, 1,10,000. On 1,10,000, the interest will be computed. That should be the answer. So two alternative answers are possible here. Okay, and I say should definitely consider this. Please here, you please share it so that if it may come across them, someone over there, and definitely they may consider. Okay, I don't know whether anyone will listen, but we will make an effort from our side. Okay, assuming the company has an ITC balance of 2,50,000 each under CGST, SGST for the said month, compute the interest payable if entire tax due for the said month was paid through electronic credit ledger to the extent possible as per the provisions of the Act. Suppose if they have a ITC balance of 2,50,000 each under CGST, SGST for the said month. Again here, so as clearly they gave ITC balance 2,50,000, which means that for the said month, which means that this 40,000 rupees will be definitely included. Here there is no alternative assumptions. Clearly we can take ITC balance of 2,50,000 for the said month. Company has a ITC balance of 2,50,000 for the said month. When they say ITC balance, definitely that 40,000 will be included in this. So here there is no alternative answer, correct only. So 1,80,000, lot of credit we have, we can adjust. So there is only GST payable under RCM 40,000. So on that GST payable under RCM only interest will be computed. Okay. So here there is no alternative answer. This is correct only. But here only there is an alternative answer possible. The student should get the marks. Then next, 4B, comment on the given independent situations relating to GST procedures Your answer should include relevant provisions of the law as may be applicable. Zungu Enterprises, a trader engaged in buying and selling of medicines within the state of Delhi, is not registered under GST. It has exceeded the turnover of 20 lakhs on 15 July and also exceeded the turnover of 40 lakhs on 14 February. So what is the applicable threshold limit? They are exclusively engaged in sale of goods, and that too they are located in Delhi. Then the applicable threshold limit will be 40 lakhs. So when are they crossing 40 lakhs? On 14 February they are crossing 40 lakhs. It applies for registration on 28 February, so within 30 days, and the registration certificate was granted. What is the date on which they are liable to register? 14 February. And what is the effective date of registration? If the application is made for registration within 30 days from the date when they are liable to get registered as per section 25, it is the date on which they are liable to get registered is the effective date of registration. So here the effective date of registration is what? 14 February. If the application is not made within 30 days from the date they are liable to get registered, the date on which they get the certificate of registration should be taken as the effective date of registration. That is not applicable in this case. So therefore 14 February will be taken as the answer. Okay. All these are intermediate level question it is. Okay. So 2 marks guaranteed. Then Go To Dress is a chain of stores dealing in ready-made garments through 5 showrooms in Delhi. It has a single GSTIN for all its showrooms in Delhi. All its showrooms in Delhi, single registration, which means one place will be shown as principal place of business and other places will be shown as additional place of business. So now there is one principal place of business. Where is it? Principal place of business, Karol Bagh, Delhi. One of its consultants has suggested Go To Dress to maintain books of accounts of all its 5 showrooms at principal place of business at Karol Bagh, Delhi for better administration and control. Give your comment on the above advice. Yes, as per section 35, so we need to maintain the accounts and records pertaining to the business in the principal place of business and accounts and records pertaining to additional place of business in each and every additional place of business. So that is the provision we need to write. 2 marks. Then question number 4C. So this question number 4C, again in that marathon I have discussed interest computation under provisional assessment under customs. Okay. So Joginder and company imported goods valued at 12 lakhs wide bill of entry presented before the proper officer. Okay. So here Joginder and company imported goods valued at 12 lakhs wide a bill of entry presented before the proper officer on 15 December, on which date the rate of customs duty was 20%. The proper officer decided that the goods should be subject to chemical test and therefore the same were provisionally assessed at a value of 12 lakhs and Joginder and company paid provisional duty of 2,40,000 on the same date after fulfilling the requirements for provisional assessment. What are the conditions to be completed before payment is made for the purpose of provisional assessment? They need to execute a bond. They need to execute a bond in prescribed form undertaking that if there is any difference in the payable, duty payable, that they will pay, and that bond should be like in the form of bank guarantee. So, but not a surety bond, it should be a security bond in the form of bank guarantee or cash deposit. Okay, that is one. Determine the amount of interest payable. If the differential amount is, what is the final duty assessed? 3,80,000. How much they already paid provisionally? 2,40,000. So 3,80,000 minus 2,40,000, the differential amount into what is the rate of interest in customs? 15% per annum. And the interest should be computed from the first day of the month in which the provisional assessment order is passed. So when the provisional assessment order is passed 15 December, but we need to count from 1st December. Till the date we are making the payment of difference, that is 31st January. So which means that from 1st December to 31st January, December 31 days, January 31 days. So therefore 62 days. For 62 days we need to count the interest. This is the answer. Simple question only. Okay. Then next one. Question number 5A. On scrutiny of returns filed by Chandan and Co., the department found some discrepancy in ITC claimed by the company and consequently a department audit was conducted under section 65. On conclusion of the audit in the February, the department issued a show cause notice alleging that the company had wrongly and deliberately claimed ITC in the returns without actual receipt of goods for the month of January. So the Joint Commissioner of Central Tax, not being satisfied with the reply given by the company, passed a written order. So they passed an order and the order confirmed on that person for 30 lakhs and imposed a penalty equal amount under section 74. Agreed by the order, Chandan and Co. decides to go for appeal. To whom it should make an appeal? Who passed the order? Joint Commissioner, means adjudication authority. The first appeal is to appellate authority, and appellate authority also, which appellate authority? Commissioner appeals, because joint commissioner means next level commissioner appeals. Appellate authority, commissioner appeals. Can an appeal be directly made to High Court? No. When there is a appeal route available, you cannot go to the High Court directly. However, using a writ petition, we can go to the High Court. That point we can write. What is the time limit for filing appeal in the given case? So 3 months from the date of receipt of order, adjudication order. The date on which order is received is 1st May. So from 1st May, 3 months. So 1st September, May, June, July, August, 1st August. And there is a continuation of delay for 1 month. So therefore, in the present case, if the appellate authority condones a delay, 1 month. So that is the time limit. Is there any requirement of pre-deposit of any amount? Yes, pre-deposit will be 100% of the admitted due plus 10% of the disputed tax. Here, they have not given anything about admitted due, means disputed tax. What is the disputed tax? Tax component is 30 lakhs, CGST, SGST. We can take total. So 10% of that will be what? 3 lakhs. That is 1,50,000 under CGST, 1,50,000 under SGST will be deposited as pre-deposit. So that is the answer for this. Actually, it is a simple question only, and any student who attended, who has seen rocket revision video on appeals, hardly half an hour, they would have got 5 marks. Okay. So with lot of efforts only, I have taken that rocket revision, and lot of process is being undergoing. So what can be asked, what type of questions can be asked, all these things. So I am doing it for free because many people really should get benefited, because they really find it difficult to get the proper guidance on the subject, mainly for that reason only. Okay, so I started in 2020. So till now, every attempt I am giving new recorded video on rocket revision. Every time I am doing it new only. So the same video, I am not attaching anything and all. Every time I am doing recording for the sake of the students only. Okay, so it is the students who should get benefited out of this. That is the sole objective. Are you buy the video lectures or you are not buying video lectures, it's okay, because if not, suppose if you say that you are not a good faculty, so then no issue at all. So if you are not buying video lectures also, I will earn money from somehow. So some other class I will take, so I will take some other subject, I will go to a college and teach, I may do practice, I may do consulting, I may do litigation, I will make money. So making money is not the prime objective here. So it is to get benefited. The quality, the good quality and the real subject, the student should get imparted. When lot of people out there are telling some crap, so I really felt sad that why they are not giving the proper knowledge. So that's the reason. There is no other agenda here. Okay, so over to you only. So please make it useful. So please ask your juniors also to just please refer this, and they should get benefited. Even that's it book, a small book which I am giving. So from that only I am taking rocket revision. So what I am charging is 300 rupees or 325 rupees including courier. So the cost is damn cheap. It's a color book, and my print cost itself is coming to 200 rupees, and I have the other handling charges, packing charges, courier charges, etc. So I am not making huge money out of that. Okay, so please recommend this to your juniors so that they should get benefited. Okay, that is the sole objective. Fine. So coming back to this, question number 5B, Octa manufacturers Jalandhar, a registered supplier, instructs its supplier Dawson Limited to send a CNC machine directly to the job worker J Enterprise outside its factory to carry out certain operations on the goods. The CNC machine was sent by the supplier on 7 March and was received by the job worker on 10th March. J Enterprises 2018, J Enterprises carried out the job work and returned the CNC machine to the principal on 1st March 2021. First, in case of capital goods which are sent for job work, there is a condition that the capital goods should be returned within 3 years from the date when it is sent on job work. So in this case, it is directly received by the job worker. So therefore, from 10th March, within 3 years, is it received back? Yes. So 2018 to 19, 19 to 20, 20 to 21. Yes, so therefore within 3 years it is received back. So therefore, auto manufacturers is not required to reverse any ITC. Would your answer be the same in place CNC machine jigs and fixtures were supplied? In case of jigs and fixtures, molds and dies and tools, so there is no condition to bring it back within 3 years. So whether it is brought back within 3 years or not brought back within 3 years, there is no issue pertaining to the ITC that is availed. Okay, that is the answer for that. Again, simple provision, section 19, job work. While discussing rocket revision, this much only I discussed actually related to job work on that one question for 4 marks. Then next question number 5C. Cliff Paul, a resident and citizen of USA, visits India on a business tour. He made declaration to the proper officer about his baggage under section 77 of the Customs Act for the purpose of clearance. During the scrutiny of the declaration, the proper officer found that some of the articles declared in the baggage brought by him were prohibited to be entered in India and were detained by the officer. Although Paul did not insist to clear those articles, value of those articles was very high and it was difficult situation for him. You are required to advise any procedure. Yes, we have section 80. Temporary detention of baggage. When we bring any dutiable goods, so those dutiable goods which are brought into India or prohibited goods which are brought into India, so those dutiable goods and prohibited goods which are brought into India can be declared in the baggage and temporarily detained with the customs officer, and that passenger again when he is returning he can take, or he can authorize any other passenger to take, or even that goods can be sent by the customs officer to his place. Okay, so that provision is there, but the condition is that it should be declared. Check whether it is declared. Yes, it is declared. Yes, it is declared. So due to that reason we need to write about this temporary detention of baggage, section 80. Then question number 2. Actually this is out of surprise, because December 21 they gave a question on baggage. I thought again a baggage question will not come on duty drawback, but this attempt they gave a question again on baggage. Okay, maybe for next attempt November 22 there could be a question on duty drawback. Then question next number 2, Raghu Limited imported a machine from Japan. The payment includes 2 lakh for post importation charges for installation and testing at the site of Raghu Limited in India. These charges are payable as a condition for sale of the imported machine. The department contends that this amount is includable in the assessable value. Examine the correctness of the stand taken by the department. Yes, post importation charges will definitely be included in the value as per rule 10 sub rule 1 clause E, because any expenses which are paid by the importer as a condition of sale of imported goods should be included in the value, even though it is a post importation. As it is a condition for sale of imported goods, this 2 lakh should be included in the value. Then, so last question, this last question is this time purely theory question. 6A, enumerate the suppliers to whom dynamic QR code is not applicable when they issue invoice to an unregistered person. Dynamic QR code not applicable. Big toe. Many times I told big toe. So B for banking company, I for insurance company, then G for GTA, then another G, government department or local authority, then T for transportation of passengers by any mode, O for OID or supplier, E for exhibition of film in a multiplex theatre, irrespective of the aggregate turnover. Okay, so if you have written this, 4 marks. So this I gave in the That's It book. Even in rocket revision I discussed. Or with reference to section 90, briefly discuss the liability of partners of a firm. Partners and firm, this also I discussed in rocket revision. Partners and firm are jointly and severally liable for the dues of the partnership firm, and the retiring partner is liable for the dues till the date of his retirement if he gives a notice of retirement within 1 month from the date of retirement to the commissioner. And if he is not giving notice within 1 month from the date of his retirement to the commissioner, then till the date he gives the notice he continue, even though he got retired, that the dues he will be continuing. Okay, so that information if you write 4 marks, either this or that. Then 6B, list the safeguards provided in section 67 in respect of power of search and seizure. This question only a student who attended regular batch would have written. So because fast track or revision, no faculty will cover this. So only a student who has attended the regular batch can write this. Certain safeguards provided, that is, seized goods should not be retained beyond the period necessary for their examination, and the proper officer who sees the documents and documents should make available those documents to the person from whom it is seized to make copies thereof. And for seized goods, if a notice is not issued within 6 months of its seizure, so goods shall be returned to the person from whom it is seized. And an inventory of seized goods shall be made by the seizing officer, and in case of certain perishable, hazardous, etc., can be disposed of immediately. And the provisions of Code of Criminal Procedure will be applicable, except that so the police officer is that is nearest magistrate replaced with, instead of sending the copies or any record in the course of such to nearest magistrate, it has been sent to the principal commissioner. Okay, that's the difference. Then last question, yes, last question, definitely those who studied or attended rocket revision can write. Distinguish between advance authorization and duty free import authorization. Copy paste, same thing I have given in my book. Okay, so that question has been asked for 5 marks. Difference between AA and DFIA. Okay, it's a theory question. So with this, the question and answer discussion is over, and so the exam was conducted on 29th, and I gave the answers on 2nd June because I was just working on the answers, the question paper part and the MCQ part collection. So because of that only, so go through this answers, and if you have already appeared for the exam, so if you have any query, you can ping me in my Telegram, or if any student who is appearing for November 22, you can take this as a revision for your exam purpose. Okay, and don't worry about all these things. Suppose if you have not written, because nothing is in your hands, so we will see on the result day. And next thing is that I am starting a new batch, online, live and face-to-face batch in Chennai. So from 11th of this month, evening batch 6:15 to 8:45. If any student whom you know wanted to attend class, they can attend, and if they want to attend any lectures of mine, you can please recommend. And thank you all, thank you for trusting me. So first of all, the success of any faculty is based on the trust of the student. So thanks for trusting me, and thank you for everything what you have done for me, and this is just the reciprocation of love and affection what you have given. Thank you all, God bless, you will get good result. I'll pray for you. Take care, and those who are appearing for November 22, so all the best for your exams. So over the next few months, I'll be giving you lot of resources for your exam. Stay in touch, and please share this video to the extent possible to the people, and ask them to subscribe to my channel. Thank you all.